If you are recording the webinar, this is where we'll start. I want to welcome everybody. My name is Rob. I'm Rob Booker of the Traders Podcast of TFL365.com, and I'm the author of Adventures of a Currency Trader. My good friend Jared developed a high probability trading methodology to help find breakout trades using a free indicator that almost everybody here downloaded, and we'll make sure tonight that you learn how to use that indicator to make some money. You don't need any additional training. You don't need any additional anything really. However, at the end of this presentation, I will invite you to an advanced course together with Jared that stretches over 6 lessons and 3 live coaching calls to help you take your education further. At this point in time, I now have about 50,000 people on my email list and about 20,000 listeners of the Traders Podcast. And as you can imagine, it's pretty impossible for me to answer everybody's questions every time I do a webinar or give something away for free. You also know that I am committed to extraordinarily low-cost training to keep most of the money in your trading account. I understand from the very beginning of tonight's webinar that some of you won't be interested in taking your training and your education further on this indicator. We wish you the best, and we love you. We care about traders. But I want everyone here to know that the way that we make sure that those of you who want to get your questions answered can do that in a smaller setting is by offering something with a live coaching question and answer component attached to it. It's pretty much the only way we can make that happen. We never mean to offend anybody, and I don't mean to make any excuses or apologize for having something for sale at the end of the webinar, but I want you to know that's coming. And I want you to know that when you want to take your training to an advanced level or to the next level, a good way to do it is hitch your ride to somebody making money already. So I want you to meet Jared, who is, as a matter of fact, somebody making money. Thanks to Apple and the recent iCloud hacking, I was able to hack into Jared's Instagram account. So before we get started tonight, I want you to get to know Jared just a little bit. You're not going to find any photos of Jared online in a pimped out Lamborghini, all tattooed up or hanging out with Swedish supermodels or something like that, or acting like a jerk on some yacht or treating people poorly. Jared is a family man. The reason Jared has a trading desk and a trading computer and trades from home is so he can be with his daughter and so he can be with his wife. He's a family person, and he, I think, represents the best of why we are here. We're here to have the freedom to spend the time with the people that we love and to support and take care of them. My friends and the people that I trade with are people, number one, that make money, and number two, represent the values and the beliefs and the ethics that we all share together. We're all in the same boat together. Over 10 years ago, Jared started right where the rest of us all begin. Someone who wanted to have a life that was free from being told what to do and able to do what he wanted to do. And it didn't come easy, and it didn't come without a lot of heartache and losses and struggle. But he put the time in, and he got it done. Jared now lives in Southern California, right across the street from the beach in Huntington Beach. He has a beautiful family, and I've spent lots of time with them, and I love these people dearly. They are not just traders and people that I respect, but Jared's a friend of mine, and I am super happy to introduce those of you who follow me to Jared and to welcome Jared here into the webinar to spend some time with us this evening talking about how to make money. So I want you to know, this is somebody that you can trust. This is somebody who has your best interests at heart. This is not somebody who wants to make a living from selling you things. It's someone who simply wants the best for you. I know that's easy to say, but I think I've backed it up over the many years of time that I've had in this business. As I said, later on tonight, I will let you know how you can get some advanced training that takes this a step further. For those of you that want to take it another step further, I will give you that information. But for now, I'd like to turn the time over to my friend Jared Johnson and let him describe to you how he uses this indicator that you've downloaded and installed. We'll save some time at the end for just a couple questions, but we wanted to leave the bulk of the time for training and education on how to use the indicator to make some money. Jared, I'm going to make you the presenter so you can take this away.
All right. Okay, let me get my screen going right now. Okay, how's that screen looking?
Delightful.
Perfect, perfect, coming through. Well, let me just first off start by saying if at my funeral half of the things that Rob just said are said, I will definitely die a happy person. So that was a very nice intro, Rob. I hope I can live up to those kind words. So thanks for that.
You're welcome.
And I'm super excited to be with you guys tonight. Many of you, I recognize some names, and it's good to see you all with us. And for all those new people, it is very nice to make your acquaintance. As with Rob, I love traders. I do free webinars every Monday, just kind of market outlook webinars, what I'm looking at for the coming week. And I love to see new names and new faces, and it's always great to build a network of traders because we're all just going at this thing together. So I'm super excited to talk about this indicator today. If any of you have not yet downloaded the indicator, here's a little reminder of where you can get it. Just j.mp/Jared free. I am free. So you can download the indicator there. At that page, there will be videos and some details on how to get it installed on your MetaTrader and how to get it working. But let's talk about a couple of things about how this indicator works. Both Rob and I tend to have some similar trading styles, and we tend to look at some things very differently. And all in all, I think we agree on a lot of things. And one thing that both of us love to look at is exhausted trends, and I really, really love exhausted trends. And that's what this indicator is going to be very helpful in getting us into, because these exhausted trends can be some of the best breakouts and some of the highest probability trades that we can get into. And so we're going to talk about how this indicator is going to do that for us. So make sure, once again, j.mp/Jared.free for that indicator. Once you download it, if you have any problems, you can find me in all of these places here. My website, daytradersfx.com, Twitter, daytradersfx, or you can just send me an email at jared@daytradersfx. So I'm happy to help if you have any questions about the indicator. There's a lot of support on the page where you download it, but there's always questions, and I'm super happy to answer any of those for any of you guys. Okay, so what this indicator, once again, will do a great job in helping us do is, number one, identify overextended markets using some very simple and interesting points of reference, and help us to find the breakouts and avoid the fake outs. So let's look at a couple of examples, and I'll talk a little bit more about what what elements are going to be looked at with this indicator. But first of all, we're looking for a couple of things. I love the 200 exponential moving average. That's the EMA exponential moving average. That's one of my favorite things to look at on the charts. I like to look at candlesticks that move away from that exponential moving average. I like to look at pips moving away from the exponential moving average. And calculating those two things together, we can get a percentage of probabilities of the trade that we're getting into, the breakout we're getting into, measured against previous movements. What kind of probability do we likely have that this is going to be a good trade and that it's going to run in the direction we're looking for it to run? Now, let me just point out a couple of things before we get to that chart. Let me go to my chart where you can see my indicator, and here we have the pound yen. This is a great pair. By the way, the pound yen is such a fun mover. This thing feels like that crazy old volatility is back that some of us have missed over the last few years. The pound yen is such a wild mover, and we can see in the last several hours it moved down 300 pips. It's back up 170 pips. In a couple of hours. This is the movement we love to see on the pound yen. Well, in doing some of this movement, it has produced some pretty interesting numbers for our indicators. So this is a typical chart setup. Here's a 200 exponential moving average. I've got some pivot points. I love looking at missed daily, weekly, monthly pivot points. Missed pivot points meaning during the period they were created, the market did not touch that pivot point and has not touched it yet. And so we have some nice pivot points in here that I love to look at. Again, daily, weekly, monthly pivots. And then we've got some numbers up here. So let's just talk about for a moment what this indicator is going to tell us, what these numbers mean. First off, we can see that there's some arrows here. So these arrows are telling us that there is an interesting setup, that there's something worth watching on both the 15-minute chart and the 1-hour chart. And since we're on the 1-hour chart, we'll go over these details real quick. So again, as I mentioned, I like to look for candlesticks that are moving away from, just charts that are moving away from the 200 moving average. This is my point of reference, my moving point of reference. I love looking at highs and lows and big, yearly support and resistance levels and all that stuff. But a moving average is great because it's a good kind of target in relation, or a point of reference in relation to the market movement. Sometimes we see these big, wild, crazy movements, and all of a sudden that resistance level that we were targeting, instead of being 100 pips away, it's 500 pips away, and now the likelihood of the market getting back to that level might be pretty low. And so with a moving average, we have, again, just kind of a good spatial relation to current price action and great points of reference. So again, 200 moving average is a great one. And this is telling us that on average, the 1-hour chart will hit the 200 moving average on the pound yen. It's different for every pair and every time frame. But on average, it's hitting that 200 moving average every 129 bars, or every 129 candlesticks. So we'll say 130. We'll just round it up. Every 130 1-hour candlesticks, we're hitting that 200 moving average. Well, it's telling us right now that the current bars away from the 200 moving average that haven't yet touched, the current number is 251. We're creeping up on double the average number. So that might be kind of interesting. If this is hitting about every 130 bars, and here we are 250 bars away from that moving average, what are the chances that this is getting overextended and that this is ready to start making a little bit of a move back in that direction? Well, let's look a little bit further. What you'll see that the indicator will tell us as well is look for a trade. Yes. Now, why do we want to look for a trade? Number one, we're nearly double the average number of candles that it takes the market to touch that 200 EMA. Number two, I decided to kind of take this a level further, and I said, all right, if every 129th bar is touching the 200 EMA, how often is the market running in pips further than that 129th bar? Let me show you a little example of what I'm talking about here. So here was the last time, let me move this guy right here. There was the last time the pound yen touched the 200 EMA on the 1-hour chart. And we can measure this. We can see that the indicator is already telling us 251 bars. Well, if the average number is 129, so here's 129 right about there. So here's our 129th bar that we would expect. Average numbers are telling us that this might be the one that runs into that 200 moving average. Well, it didn't. It didn't run into that 200 moving average. And so the next thing I wanted to look at is every time the market exceeds the average number of bars, how many pips does it go? And we have those details right here as well. On average, beyond the 129th bar, this 1-hour pound yen will go about 195 pips further on average. So here's our 129th bar, and 195 pips is right about to that low of the week where it closed. That's about 200 pips, give or take. So that's an average movement away from the 200 moving average after the average candlestick number. I hope this is all making sense. We'll look at a couple more examples. So I have that average number of pips, and I also have the maximum pips. Now we're going back over several years of, this is looking back over several years of data, several years of market movement. And this is saying, okay, past that 129th bar, the biggest movement that we've seen so far has been 772 pips beyond that 129th bar. 772 pips. So our 129th bar was right here, and we can see that this ran down with a low right there of about, you can see this number right here. By the way, I have to mention, this is an updated version of the indicator that I need to pass out to everyone. It's brand new, and it just adds one extra line. So if you don't see this extra line right here, that's why. It's a brand new update. I'll make sure to get that out to everyone ASAP. But all it does is adds this, and we can manually look at this. But it's saying the maximum number of pips past the 129th bar is 772. So in this movement right here, without having to measure it, it's telling us that currently the market has gone 692 pips past the 129th bar. So what does all of that mean, and how does it apply to us? Well, these currency markets, something that's different about currencies versus stocks and commodities and all these different things, and this indicator, by the way, I've tested it quite a bit on stocks and on some of these other things, and it works really, really well. But currencies have a huge benefit in going up or down. You know, it's not quite the same. Stocks can dip, and there's a huge push to get them back up again, whereas a currency can run down for a long time because one of the pairs is benefiting from down movement, and then it can run up for a long time because the other pair is benefiting from up movement. You know, there's weakness on one side or the other, strength on one side or the other. And so we see these currency markets just kind of go up and down in these huge ranges. And so this is why this is so great. This is telling us that some past movements have run so many pips and so many candlesticks away from the 200 moving average. Well, again, what markets like to do is, yes, they like to set new records and go a little bit further each time, or maybe they don't go as far this next time, or whatever the case may be. But this gives us a point of reference. According to previous movements, this has run about as far pip-wise and candlestick-wise as we've seen in quite a long time. So that's telling us that this now has a very, very good probability of making its way back up to that 200 moving average. So again, our numbers are extended. We've run twice as many candlesticks as the average number, and we've come just shy by a couple of pips of the furthest movement, pip-wise, past that average number of candlesticks. And so again, that's telling us that this is now a fairly stretched market. Now, I do have to put the disclaimer out there that I'm a little bit extra cautious with the end pairs, because those can just run forever. But it doesn't change the fact that when there's a nice setup and when there's extended numbers right here, we can take a breakout with a whole bunch of confidence. So I wanted to show you this example for two reasons: to show you what the indicator means and how it works a little bit, and to kind of give you something to watch. So if we're looking at this pound yen going into the next couple of days, next couple of weeks, what if we just draw a trend line right down? Let's just go to our two most recent points right here, and we just draw this trend line right like that, and it goes straight down. So we still have an unbroken trend line. We have some pretty good numbers, 75% probability. By the way, that's kind of the key number that I look for, 75%. That's important, important, important. 75% means that at least in the way that the indicator is set up, it's saying that 75% of the previous movements have been this distance or less in both pips and candlesticks from the 200 moving average. So there's been 25% of trades in the past that have actually gone further away from the 200 moving average than this in both pips and candlesticks. But this is telling us that 75% of them have not even been this big. So this is a great opportunity for a nice high probability setup. So we just look at this trend line right here. Whenever this decides to break and make a move forward, let's just say that it happens somewhere along here and it makes its run. We have about 270 pips to get to that 200 moving average on a 1 hour chart. So it's not even a big time frame. It's probably not going to be a long-term trade. We could be in and out of that in several hours, maybe through the course of the day. And we can get into a breakout like this with a lot of confidence, with the fact that this is a movement that has gone further than most of the other previous similar movements like this. And that's telling us that, yes, the pound yen could make a new record, and it could say, forget the movements of the last 5 years, I'm going to go even further. But chances are we're going to get a very, very nice breakout and a nice move up towards that 200 moving average. And to just kind of sum that up, I love to target the 200 moving average. That's kind of my moving profit target. So to kind of put it all in a short couple of steps, what we're looking for is 75% or higher probability, current max pips as close to previous max pips, meaning we want to find something that has run close to as far as some of the biggest previous movements that the indicator is measuring, and then we just draw a trend line and we get in on that breakout and we target that 200 moving average. I wanted to show you this because this is a live trade. This is something that we can watch. This is something we can trade going into the next day or two, sometime this week. This will probably set up and give us a nice little move. I've got several examples of this, and let's talk about it a little bit more. But that is a really good example of a setup that we're probably going to see in the very near future. Okay. So those are the things we look at. Let's look at a couple of examples. Here is this is the pound dollar right here. This gave us a nice little interesting run. This wasn't too long ago. You can see the dates right here, September 9th, September 8th, September 9th. This had a nice little triple bottom. Now, sometimes we're going to take breakouts. Sometimes we're going to take just a price pattern, like a head and shoulders or a double top, double bottom, triple top, triple bottom. We're just looking for a price pattern. But ideally, I like to enter on breakouts because that gives us just that extra probability of yes, the market's breaking this level and it's moving towards a target that has not been hit in longer than usual, longer than average. So here's a nice little triple bottom we saw on the pound dollar. 1 hour chart, took it about a day and a half to run up, actually it trickled for a little while, and finally a day after kind of a big move, hit that 200 moving average, ran up about 180 pips. We had on this one, obviously the numbers have reset here, but we had an 80% probability on this one. It had run more than double the average candlesticks, and it was right at that maximum pip value of movements away from the 200 moving average. So it was just excellent. It was a great little move, nice little trade to get into. I don't know if some of you guys have had challenges with what I'm about to mention, or if it's just been me, but has anyone ever wondered why can't we just trade breakouts constantly? Why can't I just draw a support or resistance level, a trend line, and just trade the breakout every single time the market breaks that level? That's what I tried to do in my earlier trading career, and I found that it wasn't working as consistently as I thought it should. You know, here's 2 points of reference. I'm going to draw a trend line. The market breaks that. Why am I getting stopped out? Why am I not making money on that? And the reason is because these breakouts, we need to know which breakouts to take. Not every breakout is a great breakout. Some of them are just the market making a little bit of a move before it continues on in whatever direction it was going previously. And so this right here, our indicator with the numbers, it's going to tell us which breakouts are finally ready to really make a run for it. Which pairs, which time frames have run far enough that they're exhausted from running that direction, ready to turn around and break some levels and make some nice retracements. That's exactly what the indicator is going to do for us. Here is the dollar yen. Rob and I love to trade this dollar yen. Rob's probably more of an expert at it than I am. It's such a wild pair and can move so big sometimes, but it's a great one to trade. We had an excellent setup on this 4-hour chart. Perfect little double top. How do we know this price pattern is going to hold? Well, when it hit this double top, it was 90% probability. We had gone about double the average number of candlesticks on this 4-hour chart. Perfect little double top, holds, makes a 250 pip run down to that 200 moving average, and then beyond, of course. But great little confidence and indication of the fact that this that this double top is going to hold and it's going to give us a nice trading opportunity, and it surely did, and ran down very nicely into that 200 moving average. And again, our probability numbers were high. We were about double the average number of candlesticks that move away from the 200 EMA, and just a nice little price pattern, and away it went. So great little setup there, fantastic little move. Here's a current. We just talked about this pound yen, and just once again, look at these numbers, probabilities, and those maximum pips. And again, we'll get that indicator out that'll have the maximum pips line on it if you don't have it already. And this is a great one to watch. We already kind of talked about that one. Here's another one that is still currently playing out. This chart is a current chart. I took this screenshot just moments ago. Here's the New Zealand dollar. Max pips, look at that, 271. This thing ran like crazy, and basically an extra 500 pips past that max pip situation. It hit 100% a little bit ago. You can see this is a 4-hour chart, so this is looking at a couple of weeks of movement just right here. We're at about over triple the average candlesticks that it takes to hit the 200 EMA. And we had a nice little price pattern. This thing ran down, bounced off this level a whole bunch. It was already 100% when it hit this first time. And it's been 100%, like I said, for a couple of weeks. It hit that first level, it bounced up off it. And it came back down, gave us a nice little double bottom, and then it's just been heading right back up since. And that's about a 300 pip move up to that 200 moving average. It hasn't hit it yet, but it's getting pretty darn close. And it's within 40 or 50 pips, 30 or 40 pips actually from that 200 moving average, and it's going to make just a nice little run up into that. So again, a nice little price pattern. Breakouts or price patterns, I love either of them, but I really, really focus on the breakouts to get my entry, but I need to know where my points of reference are. How far has the market run from its quote typical areas? Is it far beyond where it, how far it usually goes, or is it not even to a point of how far it usually extends? And these points of reference right here that the indicator tell us can really, really up those probabilities on these 200 moving average and price pattern trades and breakouts. So it's just such a nice extra help. I always wondered in the market, I always thought, I need a little extra edge. I sometimes feel like these charts can go up for hundreds of pips or down for hundreds of pips and just have no point of reference, no anything. They just go forever, and what's the point? I mean, are we flipping a coin? Well, when we start looking at these points of reference and these numbers right here, we can really weed out those breakouts that are going to just kind of tease us and pull back a little bit and stop us out and not make us money. So with these numbers right there, we can really get a good help on that. There's a lot to talk about in the money management side and the various kinds of entries we can take, and when multiple charts are confirming, and doing it on short-term charts and long-term charts and so on. But I want you guys to walk away with something today, and something to be able to use with this indicator. So again, the 3 steps that I want you to look at is find something that has a probability of 75% or better. You might have to manually measure the pips right now, but just go back to that whatever the average number of candlesticks from the 200 EMA is, and just drag your cursor and measure how many pips further it's gone until you get this update, and find something that is as far or even further than the maximum number of pips, and then find a trend line or resistance level or support level and trade that breakout targeting the 200 exponential moving average. And it's an interesting thing to do. It'll feel a little counterintuitive sometimes, but when you get a good feel for it and you start doing it, you'll see just how powerful this type of a method is and how much it will eliminate those bad trades.
So let's say that you're watching the webinar and you say, "Well, I don't really want to counter trend trade this, but I'm willing to consider it. Show me an entry." We've got that question. And gladly, one entry that I can see on this chart right here is a trend line break. And if I ask Jared to draw a trend line across the tops of the candles at any point after the 100% mark was made, he can probably accomplish that. So Jared, in the webinar software, in the upper right-hand side of your screen, just below the orange bar, the orange arrow and the microphone and everything else, there is a tool that will allow you to draw a line. There you go. So it's not going to be the greatest line that you ever saw drawn on anything ever of all time, but yeah, you're going to see him draw a trend line here.
Ooh, look at that! That's a steep one.
Yeah, so he lives close to Disneyland, and as you can see, he just drew a roller coaster. There we go.
There it is.
So either of those ones would be adequate entries. Now, maybe you're saying, I don't, and now I'm gonna totally blow. I'm just gonna crush the whole system here. Maybe you've decided that you don't have any interest in counter trend trading that. Maybe you want to trend trade that. Here's an example of how I would accomplish that, and inside of some of the advanced training you can get deeper into it. But I want to say, once you get that 100% mark, and once you see this start breaking through trend lines, on a shorter time frame chart, like a 15-minute chart, you're going to be seeing a move away from that moving average. You're going to be seeing a trend. And on a 15-minute chart, that's going to be a very, very, very short-term trend moving upward. And so what looks like a counter trend trade on a 4-hour chart will look like a trend trade on a 15-minute chart. Additionally, I've been playing with this once it gets to 75, once it gets to 50. I've been playing with this indicator and actually trading breakouts below the lows, Jared. So if you go back up with that tool again and you just draw on the far left-hand side of the chart, you draw some horizontal levels on the far left-hand side of the chart, horizontal levels of support. And I was watching how amazing this is. Just trade the breakouts. You just hammer on this until it gets to 100. And when it gets to 100, you're like, okay, I have really clearly, I have reached a point at which I am tempting fate here. I need to be out of my sell trades. And I really like that. So if you're a trend trader, you're also, that's why I call this high probability breakout trading, because if it's really on a run here, and it's beating the 50% movement, there are ways to say, okay, the average is 103 up at the top, it's 75 away, and the average is 103. I'm going to trade breakouts with the trend lower. And you can just you can completely ignore it once it gets to 100, and you can say, now I'm going to wait for it to get back to the moving average. I'm going to wait for this move back up, and all you counter trend traders can go fly a kite. Because that's dumb. And Jared, you and I wouldn't be offended at all. We just want people to make money.
No, exactly, and that's such a good point you bring up because I've been asked that quite a bit as well. Counter trend trading's tricky, it's difficult, and it is a little bit tricky, it's a little bit difficult, and your points are so great about using this as well. Trading it until it gets to that 100% or 75%, trading it, until it exceeds those max pips or reaches those max pips. It's super, super great for that. That is an excellent technique as well.
And when the market is highly volatile and it is moving away from this 200 moving average, the volatility is back. You're going to see currency pairs on multiple time frame charts moving away from their 200 period moving average. In volatile times, trading breakouts, momentum breakouts above highs or below lows is a completely reasonable thing to do, as long as you don't get yourself stuck into a trend trade past that level, past that 100% mark. And that's what I love about this, is it starts to say, all right, we're stretching the boundaries of what is ordinarily done here. Don't do any more trend trades. At the least, just stop doing that. And that's where trend traders get into trouble. I have a couple friends on Twitter. They're not particularly well-known traders, but I followed them for a long time, and I would consider them friends. And I watched them make a lot of money as the dollar-yen, for example, recently rose to above 110. And then I watched them give everything back. I watched them give all of it back. They gave every last cent of it back. And what good is a trend trading methodology if, when the counter trend trades start to come into play, you just refuse to agree with the end of the trend? This is a way to incorporate realistic thinking, probabilistic thinking into your trading, and say, I'm going to use some statistics. It's not going to be perfect, but at least I'm going to employ them to the best of my ability. And if I'm wrong, fine, I got it wrong. But at least I'm not going to trend trade into insane territory. And I'm going to be done when the statistics tell me I probably should be done.
Absolutely. Super, super good point. And you're exactly right. This indicator, it's not just meant for counter trend trading. It's meant to really give us a point of reference. Where is the market in relation to, what it has done in the past months, years, many, many years. And this is, it's just nice to have a point of reference on these charts that can seem so vast and so just uninhibited. And they actually do respect these numbers very, very well. So, yes.
All right. So I got a question for you. Some traders have told me when they loaded this indicator, the statistics do not load in the upper right-hand section. What's up with that?
Okay. So you're having
So it's possibly an error with the amount of data that they have loaded on their charts. Does it take a while to sort of set in?
Yes, it can take a couple of moments to load up on the charts. If you have any problems, one thing you can do, and of course you can send me an email let me just put that one up one more time. So anybody that is having that problem, do send me an email and let me know, and we'll get you fixed up. So you can just send an email to Jared@DayTradersFX, and we'll get you set up there. But one thing that you can do when it loads up, and if it's giving you some errors and some details, just right-click on the screen, go to Indicator List. And apparently I've got two on here. Go to Indicator List, and then you'll see the 200 EMA distance on there. Just click on that and go to Edit. This might be a lot of steps, but for those that are kind of familiar with how EAs are set up, just go to Inputs there, and at the very bottom you'll see this guy right there that says Use Local Data and False. So you can have that at true or false. True will use the history off your charts. False will use our maximum history that looks back, years and years. And the reason we did that is because some people, it's just interesting on various brokers. Some brokers will go back a year on a 1 hour chart, and some will go back 4 years on a 1 hour chart. And so we just went back on the furthest chart that we could find and gathered these statistics. So that's why we have kind of some preset statistics in there for you. But just mess around with that local data, set it to true, set it to false, and if you're still getting that error message, send me an email and we'll get you fixed up.
That's perfect. Jared, I totally appreciate this. This has been recorded, and if we could make me the presenter in just a moment, we'll answer a few final questions. Jared, do you have anything else you want to say before I take back the presentation?
There's a lot more to say, but without going into another long presentation, I think I'm good.
Okay, that's great. I'm going to make myself the presenter. We'll come back to my screen, and I want to give everybody an invitation and let you know what happens next. It's been great to have Jared here, and we've got the basics in place. It's a great way to add some measurements and some probabilities to your everyday trading. It adds context to the market. It's not a standalone trading system meant to give you obvious entries and exits right off the bat. It's something that adds flavor and context to any kind of trading situation that you're in. But it also does lend itself to the creation of trading systems. And for those of you that like to look at indicators in an advanced way, this is something that I think you're really going to love. I have watched these lessons, and they are all done, and they are really good. What Jared's done is he has put together lessons that walk through breakout trades, early warning trend trades, reversal warnings. And I think those are, I can't remember, I didn't want to redo the slide in the middle. I think those are 6 lessons, right, Jared?
Right. Yeah,
those are 6 lessons that are available now, and 3 live coaching calls to answer your questions, and of course ongoing support and lifetime access. If you're interested in putting the pieces of this puzzle together a little bit further, as you know already from me, I never ask anybody to make a giant investment that would rob your trading account of any substantial amounts of profits. So what I've done is I've put this inside of the new TFL gift shop. And you can get this high probability breakout trading course. It's available for instant download. You can go to the TFL gift shop and you can get that. Well, you might be wondering, what the heck is the TFL gift shop? All right. TFL365.com is my website for traders, trading for a living 365. If you go to TFL365.com, right on that home page, there's a giant picture of Jared's course. And when you check out on the shop, if you use the discount code Jared, you're going to get a neat surprise discount that is available tonight only for having showed up at the webinar and stayed the whole time through. The discount will expire tonight. And it's just to say thank you for being here in the webinar and actually showing up for it. And a lot of you have shown up for this webinar super late. I know that I like to get to the bottom of things, and I know that I like to explore the edges of a trading system and stretch it to the max, and I like to talk to the person who invented it, and I like to get educated. I like to get smarter about my trading. This is the kind of trading methodology that is going to pay dividends on down the road for a long time to come. It's going to save you money on getting out of trend trades that turn out to be losers, and it's going to make you money on trades that you want to get into. And once again, it's not even $97 because you can use the coupon code at checkout and you will get a discount. And that is available right now and for the next few days. So I'm going to show you what happens when you jump on over to the website here. See if I can go to my own website without breaking anything. So if you jump online and you pulls up this home page, looks great on a mobile screen if you're watching from your phone or whatever, and you click on that DVD in the middle of the screen, it takes you right to the TFL shop, and you click the Add to Cart button, and then you go, well, now I've bought 2 of your courses. That's going to make you a very happy man. And then you can apply that coupon by typing in the letters JARED and clicking Submit. That's the coupon code, and that's for being here tonight. I want to say thank you. You made a great choice. You showed up for a webinar. You got yourself educated. You got a free indicator from a trader who trades multiple $100,000 accounts and has managed millions of dollars over the course of his trading career and lives on the beach with his beautiful family because he does it successfully. You can't go wrong when getting some education from someone like that, and you know you're in the right hands when that person is not charging you an arm and a leg to do it. I recommend the training to you. I paid for it, and I did it myself, and I'm glad that I did. Jared, thank you for being here.
Thank you, and thank you, and thank you for having me. It was a pleasure, as always.
I will be inside that training course with the rest of you. So I will be in that class with you. I will be on the coaching calls together with you and Jared, and I'll be running some of my own webinars on Jared's website to show you all the ways that I have dismantled it and used it inappropriately to squeak out some giant trades myself. Thank you, everyone, for being here. My name is Rob. My guest tonight has been Jared Johnson. Wish you all a good night. Happy trading. Good luck, everybody.